All right.
We're live.
We are
It's
live.
here. It's time. It's Monday.
It's Monday. It's Monday for degen news. It's Monday for, we're kind of like, what was that magazine I mentioned earlier? Esquire?
Esquire.
Yeah, we're like tabloids today. We're kind of talking about all the...
Oh, I should totally do like a weekly world news segment or like a National Enquirer segment. That's all just crypto lies.
Crypto lies?
Yeah. You know, like the Bigfoot diet. Do you remember those magazines?
No. Bigfoot diet? What the
No,
hell?
never mind.
Don't age yourself. Don't age yourself
I
here.
don't know if that's even aging myself aside from, do you remember physical magazines?
Yeah, that's strange. They still exist, I think. I'm pretty sure they still sell them at the grocery store. I don't even know. Anyways, we got lots to talk about today. What are we going to cover?
Okay, we are going to talk about BNB because they have had some huge market growth and it's made CZ ridiculously rich, but in jail. We're going to talk about some meme coins like the Iggy Azalea meme coin. We're going to talk about boomers entering the crypto space because of ETFs. We're going to keep talking about meme coins. We're talking about GameStop meme coins. We're going to talk about Dogwifhat. And then we might, at the end, talk about Tornado Cash. But as you can tell, this is a super tabloidy episode. And the point behind this episode is to go FUD yourself, is to look at what the market is doing and look at the distractions and say, does this matter? Are there indicators here? Why am I paying attention to this?
Totally. And if you didn't guess, I might have an opinion or two.
What? You love meme coins.
On some of these coins. Yeah, they're my fave. I own zero. But yeah, let's go. You know,
JD, are you a boomer?
No, I'm just barely outside of the boomer category. Who knew? Funny story. My ex-wife's maiden name is Boomer. What are the chances?
That's rough. Rough tokes for that person. Boomers are here because of ETFs.
Boomers are here because of the ETFs. And apparently the new crypto powerhouse with, what is it, 68 trillion in assets, which is the baby boomers, apparently are increasingly more interested in cryptocurrencies. And so obviously the ETF trend has made it widely more accessible for these individuals. But it's interesting because it kind of signals a shift, so to speak, of the market a little bit. Generally speaking, they're a lot more research oriented. They're a lot slower to act. They're very familiar and comfortable with regulations and the nanny state and all of these things. So it's just a different level of scrutiny, which I think is great for the space. It's bringing us, into line with other major products. But I mean, looking at the potential impact, 68 trillion in assets held by baby boomers in the US, like that's a massive amount of wealth that obviously is not all coming into crypto. Obviously. But I mean, a certain proportion of most people's portfolios will eventually probably house digital assets. Not probably, will eventually house digital assets. And that's a big clip, no matter how you look at it. So it's pretty exciting.
Okay, there's something interesting here that I'm thinking out loud about. So give me your live opinion and tell me I'm an idiot. But we're also reading that by 2030, millennials are expected to hold 5 times more wealth than at the start of the decade, probably because people are dying and that wealth transfer is coming down. So we're also going to see that with Gen Z. We're also going to see that with Gen Alpha. And whereas before you might have been inheriting property, maybe some bonds, something like that, what is it going to look like when we're inheriting crypto?
I don't know if we have time for this rabbit hole, but there's actually some interesting platforms that have come out to aid with estate transfers of digital assets, because often it can be confusing. Heirs or executors are all of a sudden getting a will that says, hey, I've got X dollars in crypto. And they're like, what? So it's definitely something that is worth paying attention to. The other interesting fact there on that point is, I think often historically, most wealth transfers were, again, property, maybe some insurance proceeds, businesses, stuff that's like relatively illiquid and kind of forces the heirs to either step up and run the business themselves, or hire or put somebody in place to manage it. The difference here, which could be good and bad in many ways, is they all of a sudden have generally highly liquid assets that they can sell, trade, move, do whatever. And I think we might see a little more irrational behavior as that massive wealth transfer happens. But we'll have to see. Charlie Munger had a quote.
I like the idea, before we go too far, I like the idea of, when our parents were kids, they might have gotten like a bond when they were born, or like a coin set, is that we're going to start giving ledgers.
My kids have well-diversified portfolios already. That's, investing in a GIC or something for their education is not really appealing when I spend all day here understanding the space. But my kids are 12 and 11, and they both understand to a certain extent, as well as you can at that age, what digital assets are and how to participate, and they know what they think is going to be big and whatnot. And it's pretty cool. I think it's pretty neat. We're going to see a total shift in how wealth is accumulated, managed, and transferred over the next few decades, of course. Anyways, all right. That being said, boomers, traditional DeFi, what's going on with lending?
Traditional DeFi.
Traditional DeFi.
Love it. Okay.
Coined a new term.
Thing actually, which is more liquidity is coming into the space, and people who previously invested in, boomers who previously invested in TradFi, probably have a good understanding of borrow lend. And now that their money is trickling in via ETFs, we're also seeing DeFi loans surge to historical highs. Huge growth, record-breaking lending levels. Aave V3 is at the forefront, nearing $6 billion USD in loans, which is exemplifying the maturity of DeFi strategies. The overall on-chain borrowings have surpassed $11 billion, driven by major players like EtherFi and Athena. This surge reflects a sophisticated and relentless yield within the DeFi space. Do you think this is being led by boomers, or is this us?
So this is an awfully romanticized article of lending. I happen to understand lending fairly well. And what's worth noting here is 11 billion is the highest in 2 years, not the highest ever. An argument has been made, and I think continues to be validated, that traditional DeFi, the phrase that I just coined, has some work to do before we can meaningfully scale and grow out of this kind of microcosm of utilization. And so most DeFi lending is not profitable. Most of these platforms that you're looking at are not profitable, generally speaking. And so the bigger question is, what are we doing to make these strategies actually sustainable? How are we making it so there's actual capital efficiency without endless inflationary emissions? That's the conversation I think we should be having regarding lending, not just patting ourselves on the back for doing more of what we've already done and benefiting from the market movement of asset values. Without doing anything, their TVL rockets when Bitcoin rockets, when ETH rockets, when all of these large cap assets are worth more, their TVL is worth more. And so anyways, I don't want to poo-poo on this entirely. Aave has done a lot for the space. EtherFi, of course, and Athena have done incredible things with innovation. I just think we just have to pay pretty close attention to whether these protocols are actually scalable beyond where they're at right now. I think we're all hoping that they are. I'm maybe not quite so confident.
Okay, do you think that this activity is because people are banking on another DeFi summer, or is this actually being driven by real market indicators?
Well, I think there's a drive for yield. Like, yield is kind of what everybody's pursuing right now, right? I have these assets. If I'm holding based on speculation of the future, I have these assets. How can I make better use of them? How can I earn as much as possible? How can I free up liquidity if I need it to do other things? Lending is the most obvious, natural way to do that, I think. But the key really is again, even if you're going to use lending and pursue yield, that yield has to be based on something. And currently it's based on arbitrary assessments from foundations and protocols, ours included, to artificially inflate the yield that people are getting to make it attractive enough to compete with other yield opportunities. So I think we have a lot of work to do. I'm not sure if it's a expectation of DeFi summer or it's just relentless pursuit of yield. It has been a little concerning coming from someone that, spends a lot of time building in DeFi. There really has been zero interest or meaningful activity growth in DeFi. Really, other than like, I guess restaking, which I suppose could be considered DeFi, although most of that is not super decentralized. But anyways, it doesn't matter. Point is, I think we've got a lot of work to do. I don't know if there's going to be another DeFi summer. I hope so, obviously, but I'm not sure if we're that confident yet. We'll see.
Well, if leverage and borrow lend can't convince you of a DeFi summer, maybe meme coins can.
Boom! That was quite the transition.
Yeah, I really went for it.
So, full disclosure here, I don't love meme coins.
What?
Yeah.
You love Iggy Azalea?
I think they do more harm than they do good. Although short term, it feels like they do good. There's a lot of excitement. There's a lot of narrative. People are talking about this. There's lots of volume. It's all over X. It's all over Telegram.
You and Vitalik agree for once, so.
Yeah, we do agree for once. I think he agrees with me, though, not me with him. We'll see. Anyways, so Iggy Azalea's meme coin, what was it called? Mother Iggy. This is like a weird new trend too. Celebrity coins, which have zero value and are obviously a meme coin, but they are perpetuated by their social media.
Trump did it like for his
and it was ridiculous. I totally talked poo-poo about that. I didn't buy a single Trump NFT.
It's not new. It's not new. That's all.
Yeah, it's not new, but it's exploding right now.
Who else? Who was it? Ashton Kutcher and Mila Kunis had one, I think.
Yeah, that was a long time ago too, I think.
Yeah.
They got
anyway, keep going.
Anyways,
Let me interrupt 4 more times.
Yeah. So it somehow went 1,200% in the first week and is now $194 million market cap meme coin. And this goes to show, unfortunately, how blind many people are when following social media influencers. And I think I've been a fairly vocal critic against the SEC slamming down on influencers and social media personalities. I think this is highlighting maybe a need for us to really strongly consider the depth of influence these people really have. Because $194 million, all driven by her social media presence, is kind of insane. We're not actually building anything useful to society.
Is it really any different than her dropping some sort of like merch launch that people buy and then throw out in a week?
No, because you get the merch. At least you get something.
Yeah, here you get the token.
Yeah, I don't know. I mean, we saw some interesting things. I can't remember who it was. Was it Coldplay or someone? Someone did it where you could buy one of these master NFTs and you got like backstage access to all their concerts. Like if something like that was to happen, like those are kind of interesting. It's a unique way to create hopefully long-term value for the people participating. There's speculation on said long-term value, but these like straight meme coins that have no purpose and no value, I don't get it.
You know, what's interesting to me here is kind of the degen ethos again, right? So if you're a super degen, you really believe that DeFi is going to topple TradFi, and we as a people will be able to rule ourselves and so on and so forth. And of course, a lot of that and that like regen conversation comes from Vitalik. On this particularly, he said celebrities should only launch cryptocurrencies to serve some kind of public good instead of financialization as the final product. However, degens also love meme coins. So I wonder where that discrepancy kind of lies for most of us. Like, is this the only fun that we can have as degens? Like, I don't know.
It's like the ultimate example of like high leverage lotteries. It's kind of what happens. Like people are leveraging into these meme coins probably. And you're essentially buying as much money as you have worth of scratch tickets and hoping for the best, which 100%. Fine, but that's highly regulated for a reason. There has to be disclosures and odds, and you have to fully understand what you're getting. Anyways, I think the problem that I have, one of the major problems I have, is these meme coins happen, everybody gets excited, and unfortunately, the retail crowd loses their shirt. It's never the early adopter insiders that lose their shirt. It's always the retail crowd. And Last cycle was the same thing with NFTs. All of a sudden, we had all these people that were burned miserably. And,
I was actually about to say maybe the pro here is that we onboard a bunch of new digital citizens, but really short onboarding pipeline if they're unhappy with the outcome.
They're onboarded for part of a cycle. I think the other problem that I have with this is it kind of allows us as a space to focus on stuff that isn't that important. Meme coins irrelevant to the future, in my opinion. Irrelevant to the future of the technology.
Dogwifhat is not relevant to the future. They had a crash, and now Dogwifhat has a broadening wedge pattern. The price is expected to go up, and then they're maybe going to release more tokens that you could buy, and then maybe it'll drop again, and then maybe it'll go up again. And people are watching it, and people want to use these meme coins as a sign of recovery or decline. They want to use it as an indicator for our DeFi summer. I don't know.
I feel like they're just a giant distraction from what we should actually be paying attention to. And that is, how do we move the technology forward? How do we actually get past this regulatory hurdle that we all find ourselves in? And how can we start collaborating with traditional financial firms to just bring the technology to the masses? Really, like those are the main things we should be talking about. How to make this profitable, how to build real businesses, how to deal with governments and regulators and infrastructure and all of these things. But instead, we're talking about Dogwifhat or Mother Iggy. And to me, that is a very unfortunate reality of where we're at. All the brightest minds are here we are opining on this nonsense when, I mean, we could be talking about a lot more relevant things, but we're here.
I actually want to make a different point with this next one, which is the Gamestop themed meme coin. And you kind of touched on it. So let me intro this and then talk about kind of maybe the real problem here. So Keith Gill, who is known on X as Roaring Kitty and on Discord and stuff as Roaring Kitty, has once again influenced the crypto market with a social media post by sharing the opening scene from The Dark Knight on his X account. His post caused the GameStop themed meme coin to spike by 14% within minutes. This is a Sol-based meme coin. It's about the 2021 GameStop short squeeze. It's whatever. It's hit 225 million in the last 24 hours in trading volume. What I'm really getting at here is the idea of having that individual impact the market in such a way. And we've seen that with TradFi. We've seen that with Warren Buffett. We've seen that in the mix of traditional markets and crypto markets with Elon Musk. We've seen it with politicians. We've seen it with that kind of thing. So how can degens, how can people who are already onboarded to this market look at something like Izzy and write that off, but then look at something like Roaring Kitty and say, wow, I should really base my trades off of this? I'm bringing this up because I want to FUD it. I want people to have more critical thought and look for their own market indicators that aren't celebrities.
Yeah. I mean, this kind of just builds on my point from previous.
Absolutely.
I mean, GameStop was a movement. The GME thing was more of a movement to say, hey, like, listen, big finance, you've always had an edge, but we know how to have an edge too. And we're going to make life a little bit more difficult for you because they manipulate the shit out of retail people. And so that had was part of a movement. I think it was somewhat of a one-off example. AMC was another one, but GameStop was really the example, a one-off. I don't think you can replicate the movement too much. But I mean, even All In Podcast was talking about this, was talking about GameStop and these tweets and meme coins and all this stuff. Again, I don't think that is where we should be getting our advice and insight from. Like, I mean, that's like saying someone tells you just to go bet red at roulette all the time. And you're just going to blindly follow it because they said bet red. Just go put your life savings on red because somebody told you. Like, what? I mean, they have no idea if it's going to work or not. So anyways, I struggle with this because, again, to your point, I mean, you have to be critical of where you're getting your information from. What is their motivation? Do they care? Are they making money off of it?
Like, they don't care about you.
I mean, they pretend they do because they need followers to perpetuate their brand, right?
But JD doesn't care about you. No, I'm kidding.
I don't have any followers, really, so that's good.
Okay, we hate meme coins, but how do you feel about BNB?
I mean, it's kind of undeniable that whether we like it or not, BNB really was one of the first scaled attempts at being an EVM L1 alternate to Ethereum, obviously. They didn't do a hell of a lot of innovation, and they did a hell of a lot of centralization at first, and there was a lot of arguably nepotistic activity that happened there, like a lot of insiders and a lot of like Binance developers and so on. But it's undeniable the impact it's had on the space. It's been the gateway, the conduit for much of the Asian market into the space is via Binance, via BNB chain. They have since decentralized to a certain extent. I think they've done a lot of improvements to the ecosystem that have actually made it more performant, cheaper, quite a bit better. So although I'm not a huge fan of Binance in general, only because I think there's been a lot of asymmetry in influence, maybe not just influence, but impact, where I think they have an incredible unfair advantage in an unregulated market where they can see your trades, they can see your orders, they can see what's happening on Binance, and they could counter trade you, and who's to know if they do? Mm-hmm. So there's a lot of skepticism around it, but BNB chain in general has been profitable. There's incredible TVL. There's a lot of activity. There's a lot of wallets. And the price has gone freaking bananas again. Last cycle, it went bananas because L1, scaling fast, lots of TVL. This year, I don't know, CZ is in jail. And so all of a sudden the price is going up. Like I'm not sure I completely understand, but it's worth now 109 billion for an L1. Like that's half of ETH, a little under half of ETH. That's insane. So yeah, really good. It made CZ, according to that article, the richest person that's currently incarcerated in the United States.
Ever incarcerated.
Ever incarcerated? Are you sure?
That's what it says. I mean, am I sure? No, that's what is what it says though.
Yeah, well, either way, it's kind of cool. I mean, he's only there for 4 months, so he's probably sitting in like white collar.
He's sitting in Martha Stewart jail.
Yeah, like golf polos, and their food still comes with white cloth napkins and so on. I'm kind of kidding, but anyways, his net worth is at 38.5 billion. Like that's
huge,
insane. Now, he's had a massive impact on the space. Again, we've said this many times. CZ has had a big impact on the space. I'm just not that positive on some of the things that have kind of evolved over the years. But so yeah.
There's one more thing about Binance that you haven't told us yet, which is their wild number of users.
Yeah. I'm not sure how I feel about this as a headline and as an article. 200 million users doesn't add up to me at all. I don't think we have 200 million users in the space.
I feel like it's 200 million wallets. You know what I mean?
Yeah, like, so again, a lot of this is like hyperbole, and it's probably true enough to use it as a headline, but if you actually dig in, I think the reason that I was most interested about this article or sharing this is just, again, be a little bit skeptical. Just because somebody says, oh, BNB has 200 million users. Like, what is that? Is that daily active, monthly active? Is that
exactly
have been established in the last 5 years? Like, what does that mean? Nonetheless, BNB chain does have a lot of users. They have a lot of small volume users, which isn't necessarily a bad thing. It leads to a lot of transactions. There's a lot of transactions on BNB, a lot of revenue for the network and the chain. I mean, I guess it kind of makes sense. There's a lot of activity, a lot of people using it. I don't think 200 million people, but I mean, compared to most of the other L1s that are still up in the top 20, at least BNB has activity and is doing something.
Yeah, there's that. Good points.
I don't know.
Okay. This has been an interesting tabloidy, esquire-y, weekly world news kind of episode. And the real reason that I put it together, we had other cool topics to talk about, like AI trading or what GameFi is doing right now. There's other things that we could talk about. But the reason I put it now is that we are almost at the really hot summertime when people want to embody the idea of DeFi summer take 2. And I think we're going to see more and more crap like facading as news. So I just kind of wanted to put the PSA out there.
Well, I mean,
get really hypey headlines.
One of the things, like, we're all vying for attention, right? So the same way that influencers on social media are doing whatever they can to pander to the followers to get the following and make money, we're all kind of doing the same thing. So as interest in the space goes up, all of these protocols are trying to find more and more creative ways to get attention.
100%.
And in a world where professionalism still isn't at the forefront, it leads to a lot of interesting headlines and a lot of interesting activities. And I think that the ultimate kind of caution here is to just be careful. Like, I mean, so many people get scammed, so many people get phished, and you get random support people reaching out to you in Telegram channels and all this other nonsense. Like, that's almost always a scam, like always. And so you just got to be, you got to be careful. So I think this is like as much a PSA as it is kind of a fun tabloidy episode.
On scams, obviously Telegram has been having that for a while. I also recently have been targeted for crypto scams on WhatsApp.
Yeah.
Which, like, I've been targeted for many other scams on WhatsApp. But the idea that now it's crypto scams on WhatsApp tells me that we're really breaching the market.
And the scams are sophisticated, guys. Like somebody in my relatively immediate family was scammed for 6 figures. But it was so elaborate. Like, they spent months grooming these people in my family, and like many phone calls and many back and forth discussions, all to scam their money. I mean, people will go to incredible lengths. Did you want to talk about one of those incredible lengths to get free money? We got a couple minutes. Let's go.
All right. So, do you remember the Orbit chain hack?
New Year's Eve. How can you forget?
After months of inactivity, the hacker responsible for the $82 million Orbit chain exploit has moved $47.7 million worth of Ether to also weird, because I thought that's a really cash deal and whatever, but let's not get into that. The big deal here is that, one, it's not obviously they're hoping they're going to be able to actually use these funds, and I know how difficult it is to secure cross-chain bridges, how hard it is to track stolen assets, how hard it is to recover stolen assets, how long things can sit around and not be touched, and then re-enter the marketplace. I think this does actually have.
Yeah, your microphone's cutting out a little bit on my end. I'm not sure if it's you, but you or me. Might be me. I don't know. Probably me. Usually is. Most things usually are. Anyways, so this is, I think this kind of just highlights the point I just made. The lengths that people will go are relative to the potential payout they're going to get. So even with all of the scrutiny on, this exploit and whatever, 47.7 million of it being moved after some months. I mean, even if he ends up with 5% of that, $2, $3, $4 million, I mean, that's more than most people will make in their lifetime. So of course it's, well, maybe not their lifetime, but close. And that obviously is probably worth the time and effort to continue doing what they're doing and wait and mess with all this stuff.
And we should note, Orbit Chain is only offering 8 million in reward for asset recovery. So
which is actually still pretty good.
It's all right, but not if you think you're going to get 80 million out of it eventually.
Yeah, you never will. So the general rule of thumb for fencing digital assets is you're going to get 10% or less in the end by the time you get it out. So that's why, if you're ever wondering why the white hat bounties are almost always 10% of exploited funds or exploitable funds, that's why. Because that's about what you would probably get on average if you went through the whole thing and you're looking over your shoulder for the rest of your life, because there's a lot of people that want their money back, including the authorities. Anyways, so to sum up, meme coins, you can make some money. Most people lose money. By the time you hear about it on X, probably too late. And you're probably someone else's exit liquidity. Be careful. Scams are everywhere. Hyperbole is everywhere. Everybody's vying for attention right now. No one knows what the future actually holds. So just be smart. The key to making money in the space is to be here long enough.
So we should do. We should do like a Wednesday's crystal ball.
A what?
A Wednesday's crystal ball episode.
I have a crystal ball. I'm not ready to share it though. All right. For everybody watching live, every Monday we do these fantastic episodes where we have a theme and we talk about kind of the major prevailing narratives from the week previously. And then we're doing a new thing. We did the first one on Friday, FUD with Friends. It was just Patrick and I talking about intent-centric developments and hybrid architectures. It was a lot of fun. Check it out. We'll be doing another one, not this coming Friday, but the one following. So give us a like, share, subscribe, set the bell, remind yourself, put a calendar invite, whatever it takes.
Do it.
And we'll be excited to see you next week. But until then, Ceara, go FUD yourself.
Go FUD yourself.
Like.
With that, I have to say, go FUD yourself.
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 Go FUD yourself.